This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Let's head around the country first off to check out the auction results from the markets over the weekend. And nationally, 1,868 auctions, so that's a big increase. But have a look at that clearance rate of 61.1%. So there's a story here. Sydney had 580 auctions and a clearance rate there strong, 64.5%. Have a look at this one though. Melbourne, now that's sharply higher. The number of auctions, 798, and that clearance rate, 66.8%, is again higher. Brisbane had 81 auctions, a clearance rate 38.3%. In Adelaide, there were 54 auctions, and the clearance rate here, 66.7%. So again strong. And the story in Canberra, 67 auctions, and the clearance rate, 58.2%. So let's bring in here the bottom line. Auction clearances held up, despite there being more properties on the market around Australia. Local buyers seemingly ignored the hits from the global markets turmoil. So let's bring in here Eleanor, Creagh, the senior economist with the REA Group. Eleanor, always good to chat.
Good to be here.
That's the story. There were more auctions, but the clearance rate held up.
Yeah, exactly right. And we're seeing that conditions so far this year have kicked off with a bit more of a kind of positive slant, and clearance rates certainly are holding steady. And that's even though, as you mentioned, we've seen more properties coming to auction this last weekend. We've got a bit of momentum picking up over the next couple of weeks as well, with more properties scheduled to come to auction again. And clearance rates really holding up quite a bit firmer than they were towards the end of last year, or a lot firmer than they were last year when interest rates first started rising, despite interest rates being quite a bit higher now.
Well, that's right. So this must be a presumption, I think, that people are now seeing the end of the Reserve Bank rate rises. But I wonder how closely they're paying attention to Credit Suisse and, First Republic and these sorts of things, and even what's taking place on the markets today, where they're not responding well to what took place in Europe over the weekend. Whether that doesn't seem to spook these property investors.
Yeah, you're exactly right. I mean, we are certainly closer to the peak than not when it comes to the Reserve Bank's tightening cycle. And actually, if we look at interest rate expectations in financial markets, we've seen that they've really flipped over the past week. What a difference this market volatility has made, and with the financial stability concerns that have come to light, financial markets were pricing 50 basis points more in terms of rate rises from the Reserve Bank this year. As of Friday's close, that's now flipped to the Reserve Bank financial markets pricing the Reserve Bank to be on hold for the rest of this year. Whether that eventuates is another question. We've still got those inflation pressures. We did hear from the Assistant Governor Kent today, really again highlighting that inflation domestically remains a key concern for the Reserve Bank.
Okay, but then there's this sort of disconnect, because Australian property investors, presumably thinking somehow that Australia is different, and even Christopher Kent today sort of tried to say, hey, we're strong, we're okay, we're unquestionably strong, giving confidence to the markets, giving confidence even to property buyers to say, you're okay, don't worry about, any sort of a meltdown, because it might be happening somewhere else, but maybe not here.
Yeah, look, and I mean, we have seen that the measures that the Fed and the US Treasury have taken and stepped in do seem to have, resolved some of those issues in the banking sector. Of course, we saw that UBS deal with Credit Suisse over the weekend as well. And I think whilst the RBA do monitor those global financial stability concerns, conditions locally are the key priority for the Reserve Bank at the moment. We saw that labour market data, employment growth remains strong, the unemployment rate dropping again as well. And I think when we look at the housing market at the moment, conditions are also being influenced by what's going on with respect to the level of supply that's available on market. So it's not just interest rates that are influencing buyers and sellers at the moment. So in most of the capital cities, supply is very, very tight, and it's actually well below pre-pandemic averages. And that constrained level of supply is, really concentrating buyer interest, and I think underpinning home prices and underpinning market conditions at the moment.
So you sit there and you look at that, because you can see just very quickly population growth rising, housing starts and housing approvals at, generational lows. These are the types of conditions, and if interest rates are cut, that just changes the mix perceptively for those investors and those buyers.
Yeah, exactly. And we've also got those positive demand drivers at the moment, I think, stemming from what are incredibly tight rental markets at the moment. So those tight rental market conditions are not easing anytime soon. We know that there's no kind of meaningful increase in rental supply on the horizon, and the rental market is very tough, which I think as well adds to, along with international migration rebounding as strongly as it is, really adds to demand to buy and in the market to buy, and is potentially also underpinning prices. But I think it's really the main dynamic is that tight or constrained level of supply that we're seeing at the moment.
Good stuff. Eleanor, Creagh, always great to chat to you. Many thanks for your time today.